All right, y'all, what's going on? Good morning, or good afternoon, I should say, depending on what neck of the woods you're in. So we'll go get started here. We'll read off this disclosure. Bear with me. We'll get started. This material, information, and presentation is for educational and entertainment purposes only, and it should not be considered specific investment advice nor recommendations. Any and all statements made on this channel are the sole opinions of Options Millionaire channel and should not be taken as financial advice. No financial decisions should be made based on the materials shown here on this channel. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Any investor could potentially lose all or more of the initial investment. Risk capital is money that could be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Trading is one of the riskiest and most difficult tasks one could undertake. It must be approached with extreme caution. Do not invest any money that you cannot afford to lose. Good stuff, good stuff. Just be big girls and boys. Interesting day, interesting week. We are currently pegged, literally exactly 4140 at the moment on ES, which in the community has been a bit of a joke because how often can we pin to 4140? How long are we going to stay to 4140? NASDAQ is a bit more bullish. They are breaking out of new 52-week highs as we speak, up to the 13,400 area. And going all the way back into, or close to 52-week highs, going all the way back to the upper 13 range from back in August. Tech is obviously making a way back up here. And in doing so, we're trying to figure out how to go about trading this stuff. On the daily stuff, I mean, I haven't even taken a trade today just because the price action has been so garbage, even on this little move up here. So we're trying to figure out how do we go about managing this movement. And the liquidity has been a little telling yesterday. Today has been a bit light. They've kind of flipped liquidity up and down today. The overarching liquidity is definitely lower here. However, that goes without saying that we're still made our way back up on a little bit of liquidity minus to the north. NASDAQ has this 13,470 on, and they've cleared out a lot of this stuff in the middle, and they put on this 13,500 while leaving the big dog all this stuff down lower. So a lot of lower liquidity. Yeah. So we continue to put on iron condor. So 4141 here on ES. We've been in a 2 to 3 point range for the past, I don't know, 40 to 50 minutes. So we're really trying to figure out where do we go from here. This has been perfect conditions the past couple weeks for short premium, whether you're putting on iron condors or just a PCS or a CCS together, because the liquidity is staying pretty close knit to this 4140 area. Yesterday is an interesting use of Bookmap, because if you remember yesterday we had a pretty significant drawdown from 4170 at the top of the CPI post all the way down until 4112, which is about a 60 or so point fall. Sorry about that. And what made that interesting is that on the way down, they posted 4160 top liquidity in the form of about 800 orders sitting on the book. So, and the fact that they added that on the way down, and it wasn't something that was just blanket put on for the past couple of days, made that a decent level to watch. And where did we top out yesterday? We topped out at 4162, which was right on that level. They managed it, they filled it. That's where we topped out at, and then we ended up selling off about 50 points or so, 40 points today. And here we are back to 4140. So my goal today is to track liquidity from here to figure out where we're going to go. Tech is obviously keeping things up here, but there's been a lot of strength in a couple of individual names and not necessarily across the whole market of tech. We'll see where that thing phase out here. But on the way down, we put on this iceberg sitting right here at 41.25, and we stuck on some liquidity down at 41.07. Before we had the VPA signal to bounce off the lows and head up here to 41.60 or 41.40, and here we are. The overarching stuff here is 41.50 up top. NASDAQ has this stuff up to 13.469, which I think would put us on a new monthly high. What is the high here? 467 is the monthly high here. That'll once we took out, if we were to reach this liquidity, this would put us in the ballpark of actually it'd be more like this thing. If we took this out, that would put us in the August levels. Now that is the overarching liquidity here, that 13,500 they put on the way up, and looks like they're pretty much going to come up here and grind through all this 475 under very, very light volume, which has been the name of the game all week long. They moving liquidity down. They moving it down. Yeah. So they are doing that. After this little top liquidity here, aside from this, I mean, they put that on earlier, but aside from that, they're still holding a lot of this stuff lower, mainly this 13,350 level that they've been toying with for the past couple of days. I don't know if that's an overarching target today or into tomorrow, but that's something they've been managing. Whereas this 13,475 is going to be the first one they're going to pivot before then. I'm going to flip over to the 15-minute chart right here real quick. So also this 451 level is the Wednesday pivot and the top of the high volume node to volume profile, which we've already rejected. 1, 2, 3, 4, 5. This will be the sixth test of this 460 level in about 3 days. And the liquidity is obviously pinned right here. So this is a pretty big level here. You see that the ES is pinned right up against R1. We can't break into green territory for the day after oscillating around R2. So XLF has made a recovery. Most X sectors are red. There's a lot of downward pressure with a little bit of upward pressure that's keeping ES flat. And the NASDAQ is trickling upwards here. So all it is a patience game here. Like I said, I haven't taken a trade today simply because there hasn't been a lot of great moves. It's just pretty mundane. So it's really a good day to watch the individual names on tech that are driving the market. Amazon being one of them. Incredibly strong day for Amazon, as is Google. Google's hanging up over 5% highs, and now it's flagging at 117. After this will conclude a 4-day rally on Google. Nvidia is still down here as well. Apple's down, but not by much. Actually, they're up now. They were slightly green, but now they're red. But now they're back to green. 173.9. Microsoft is trying to make its way back up. So you see that the pushing and pulling in tech is showing a lot of liquidity grabs here on ES all over the place. In fact, on the way down, if we'll zoom out, on the way down, back here, this was about an hour after open. We came all the way down to 41.20, and look what they did. They stacked on 41.20 on the book, and then they put down here at 41.07. And this was the largest level at the time. This was the largest level. And also they placed this 103 iceberg, which is still active. So we're not out of the woods yet in terms of liquidity. They're still putting on growth to the downside here, down to 41.07. They still got this iceberg setting. I really want to focus to make sure that, one, they either spoof this off, or if you start to see this liquidity start or this iceberg start to pump, we'll be looking for a possible drag down. But right now, as we are glued to 41.40, you see that there is a market for 41.60. They still have 41.50 on and 41.45. So this is the problem with any kind of downside look yet, is that there's not enough volume to really drag us, and we still have liquidity up here in the 41.60 area. So yeah. Did I miss something? It's Thursday. What's up, Travis? Yeah, we're doing every Thursday at 1 p.m. Eastern. I'm doing stream with Bookmap. So this is co-stream with Bookmap server. Overarching, ES is 20 points off of the low of the day. and it's off of the morning pivot. And there's something I want to show y'all on the ES chart. If you're not in the server, or if you're not track what I'm doing here, we follow Linda Raschke's first range day, or the first range rule, which is the morning high and the low for the first hour. So if we were to do that right here, we would put a line right here as the high, and then we would come down to the hourly low, which is the first low of the hour, which is this right here. And you see that it's playing out perfectly. A little bit of a data point here is that here's the high, which was the first candle. That's the opening candle. And here we are settling and wicking off of that pivot. So the morning range dictates the price action for the rest of the day. On trend days, you could still use this range, by the way, because what you would do is that if this were to be a trend up early, you would have the blast up, you would have the initial retracement, use that line as support, and then you would go higher. And that's how I would play a trend using these rules. And then flip side, if this were to go down. So if this were to sell off, I would look at it to do this type of thing here. But this is the high and low of the first hour of the day. And that's Linda Raschke's rule right there. So anyway, side note right here. And here we are right there. So a key level, not to mention we are smack dab in between R1 and S1, which is a lot of that's where we kind of settled throughout the pre-market area. And yeah, not to mention, if you were to zoom out, let's go to the 240. I'll show you a little something. You go out to the 4-hour chart. I mean, it's just here. It's just smack dab in the middle. The POC for this 2-hour, or the 4-hour, which is this dotted blue line, is 41.40. Literally right here on the POC on the 4-hour chart. It's absolutely egregious, to say the least. So, whips on everybody. What started out as a megaphone pattern, which I'm not a big believer in patterns, however, megaphones are an indication of expansion. It's an indication of volatility. But the fact that things are tightening back up here is starting to flip this into more of a diamond pattern, which is historically a bearish pattern. Now I'm a little more cautious on doing stuff like this because that's very subjective. But it's just all I'm seeing here is an attempt at expansion, and now we're just tightening back up again. So it's a little odd. I don't assign too much weight for that, but the market expansion here is started to build and now fizzled to 41.40. Now that all the main catalysts are out of the way, which makes things a little bit interesting because being a catalyst-driven market that we've experienced the past couple of years, in the past month we have thrown bank earnings, bank failures, tech earnings, FOMC, CPI, China, all these things at the market, and we have not moved an iota, not once. So it's been a little interesting to watch this to show that they are in fact waiting on something of which we don't know what it is. So that's why a tool such as Bookmap is pretty awesome to have, because every now and then it'll throw out a really high confident trade that we could take based on simply the data and not sentiment. What about you say that the uptrend on ES, the 1-day chart? Let's take a look. Are you talking about this right here, or are you talking about this here? To me, or you mean like the ascending wedge? Either way, it depends how far you want to zoom out. If you want to go back all the way to October, you've got this little thingy right here. This is ascending price wedge right here, which I'm very cautious to draw an ascending wedge on there because that's not my intent. The way I want to use this particular pattern is to show the transition between market expansion and market contraction, which this is the meaning why. So these are two phases, and we have market expansion, range expansion, and then range contraction. You see the range is expanding here, bigger and bigger and bigger, followed by tightening, which that's the phase the market goes through. The market goes from contraction to expansion to contraction, back and forth. And then if you look a little bit further, you see the change is indicated by the collective high volume period. Right here. You see this high, how much we had high volume sustained. Right at the bottom was a sign of big players, which shifted us into market contraction. And here we are in the past 2 months, now pinned to 41.40. Also with some pretty significantly low volume as well. This garbage down here is just destructive. Right here. For some of the lowest volume candles we've had in 2 years. So the 4-hour chart speaks a lot. The fact that we're just pinned right here. You see right here, they're starting to put on 41.20. They've removed a lot of this liquidity right here on 41.45. As we're once again just pounding up against this top notch here. Today's not a very high confidence tradable day, which is great. It's great to cage your expectations very early. I'm not looking to sling a lot of trades today. I'm just really waiting for one good trade that I could find a high confidence position off of, and I don't see it yet. I may not see it today. So we see these small icebergs coming on and off here on NASDAQ. Nothing crazy. And ES is right here. How is there a pre-market options chart if you cannot trade options pre-market? You can trade options pre-market. Yeah, SPX, you can trade 24.5 with IBKR. That's one of the benefits of having IBKR. You could trade, starting at 8 p.m. Eastern, you could trade SPX all the way. Today's been garbage. I've sat out as well. Nice K West, yeah. And sometimes it's great. You know, not to mention you could sit on the sidelines and kind of rest your brain a little bit, rest your mouse finger, and really hang out because it's not really that much going on today. I'm 9 points up, thinking to just observe the rest of the session. Yeah, there you go. $41.40 here, pinned. Was that? Let me know if that's not what you meant, Limbo. I was trying to make sure. Depends on how far back you want to go. It's all relative. You know, that's why when you're doing that kind of charting, I'm always a big to small kind of guy. I want to go longer time frame to shorter time frame. Longer time frame takes precedence. Shorter time frame always gives nod to the longer stuff. But all this is a continuation of February. You know, February, Wednesday, we had the bank crap, which if you were to remove the bank stuff, and here's the scary part to think about, if you were to remove all the nonsense we put up with and delete this, look what would have just happened. I mean, it would have just been here, and we'd be here since the whole year. And that's why some people are thinking that this crap can extend all the way until the fall, which would be awful. It seems egregious, but if you remove the catalyst that we experienced here in March, that's all we would still be right here. It's awful. To combat the day-to-day effectiveness of trading and try to put on a little bit of confidence in the overnight stuff, not necessarily the long-term stuff, I have implemented or started to implement Linda Raschke's 12 rules. If you're not familiar with those, Linda Raschke is a market wizard. I'm a big believer in the Hedge Fund Market Wizard books. There's a collection of market wizard books. I highly encourage you to read them. There are traders that focus on macro trading strategy, not necessarily the intricacies of day-to-day stuff for the most part. But one of these market wizards is Linda Raschke, and she came out with these 12 rules that are derived from volume and price action at particular times, which is beautiful. It sits right inside my system of volume price analysis. And one of those rules has to do with the range, which we talked about, the first hour range. The second rule, or the second of the 12, is that she talks about the power hour close. How the market closes with volume and price action tells a lot to follow up the following day. What you can expect, because the final hour of the session is the opportunity for bigger players to mark their positions for the following day. And if you look, it's pretty telling. On Tuesday, we had significant sell pressure. This is a session, this is a session, this is a session. On Tuesday, you saw we had an incredible sell volume, and then we had this massive drawdown. A little bit of spike, even bigger drawdown. So there's more sell pressure here than buying. We ended up closing here, up here, but then Yet again, after this big pop up, we had another drawdown with another close of sell pressure, and here we are once again down. So tracking the final closing moments of the market with the final volume will speak volumes onto the following day, some pun intended. So as we continue to implement this into the system, it's really helping identify what I can expect the following day. What's cool about that is that you could track the liquidity on Bookmap into the final moments as well, where they're going to stack the liquidity, because yesterday was 4160, and if you go back and look, 4160 was the main pivot for yesterday right there. 4162 with that sell pressure started to come in. So Bookmap was perfect yesterday, right on top. So right here we're back to 4140, nothing crazy. Let me see Bookmap right now. I'm still watching this iceberg. I'm not too confident on upwards moving here aside from the 4150. Just while they've got this resting iceberg and resting order flow lower. Again, I haven't said that. There's nothing that's a big outlier here. I don't have what we had yesterday. Yesterday I had a very large liquidity. Today is just a little bit of onesies and twosies. Not that much. 4150, 4105, 4107. NASDAQ has this 13475, and now this one has got this 500 we're going to still look at. $13.46 and 420s on the lower. What will be a trick from you on how to use the volume profile to avoid fake breakouts? Ooh, look at that. They just stacked on lower. Oh, they're spoofing that 420 area. Maybe a little liquidity grab down. Another 10 points or so, which is not much. That's NASDAQ. I would just be on guard for this 4120. This iceberg sitting there all day might serve a point of liquidity from yesterday. All right, how do I use volume profile to avoid fake breakouts? Let's take a look. So the first trick to volume profile is, once again, big to small. Don't get caught up in the 5-minute and 3-minute stuff, especially when you're in consolidation and there's just a big volume node here. There's not much to go off of. You have to start going out to the longer time frame stuff. So if I am looking for a breakout, let's say for like right here, we start to climb up. When I start reaching this area, and this is kind of goes back to the fundamentals of trading, where you don't want to get in the habit of buying breakouts or shorting breakdowns, the very bottoms. It's like we start shorting at the bottom or longing at the top. You don't want to get in the habit of doing that. So obviously, in the volume profile and the longer time frame stuff, if you could track the high volume nodes for like here, and this is a 15-minute. Now this one's pretty tight just because of the nature of the price action. But when I start getting up in this range, this 4160 area, I don't want to be long it up here. Not without some sort of retracement bounce, because you're entering that top end of the high volume node, and when you start getting up on all this area, there's going to be a lot of congestion, a lot of activity in this area. So for breakdowns, what I would want to see do, let's just because of the nature of this setup, and we have a node that's down here. The market loves to go node to node because it's telling the story here. It's telling the story that there is very little participation here. So if we do extend away from this high volume node, which we don't know when that'll be, but if it does, what I would want to see is a break away from this high volume node, possibly a retracement back up to clear up any imbalance, and then fill down to the next volume node. And then down here is where I'd be looking to long or to close out any shorts. Don't get in the habit of chasing the breakdown and starting a short in this area. I want to be looking to get out of my shorts in this area, not enter a short in this area, and that's where you get bounced, or if this were to flip to the upside, that's where you get reversed to the downside. So just track node to node. Track node to node. There you go. My bad. There you go. So track node to node on these things. and mark them and play to them and play away from them. But this is we get in breakout phases down here, and notice that the reason why there's a very large low volume node here, a gap, is because of this stuff. Let me show you. It's because every time we enter this zone, what is that? 4126 down to 4090, is that we don't spend very much time here. You see these quick trips through this area? We don't spend very much time in these areas. Quick down and up, down and up, through. Whereas these ranges, we consolidate for a large period of time. That's why if you think about it in these terms where consolidation zones and then traverse zones, these are where this is where you want to play the breakouts. This is where you want to play the breakdowns. This is you break down here, you short it down to here. You break out here, you long it until this area. And that's why right now it's starting to eat people up, because they're like, the market can't possibly chop for this long. Well, if you think that, then you obviously haven't traded before 2020, because the market absolutely can chop for 6 months in a 100-point range. It's terrible, but it can happen. So patience is the name of the game. I've started writing iron condors the past 6 weeks just because it's much more profitable than sitting here trying to scalp this crap until I'm waiting for the market to break out or break down. With tech rallying, I thought it might bring ES up to 4250, 4300, but it's starting to look like, despite NASDAQ's best efforts, the S&P will just not go up. Now, it won't go down either, but I'm just saying, how high does tech actually have to go to finally make the S&P break out? And that's the question that I'm trying to answer. I don't know. But it's going to have to rally. I mean, freaking Apple's already within 10 points of all-time highs here, and the S&P still hasn't budged in 2 months. So, yeah, I'm looking for this right here. And then once we start closing under this 4100 area, what I'll be looking for is the initial breakdown, and then possibly a retracement back up to this area, and then the initial sell-off, the real sell-off back down. But to wrap all this up in a bow, I need volume to do that. I need the volume to really say that the sellers are stepping in, because we see just how aggressive the buyers have been at lows. I need the buyers. I'm sorry, I need the sellers to really step in and do that. So let's look at the old Bookmap here. Still pinned 4137. We have now been in a 4-point range for 2 hours, 3 hours, 2.5 hours here. So ES is untradeable at the moment. NASDAQ presented a little bit more opportunity here, but also just not really moving. Any questions about that? About the volume profile or any other large macro stuff? Patience is the name of the game. My community, that's what I'm really harping on, is that the time to trade will come. I do think we're on the verge of a market expansion. We just have to be patient for it and play just level to level right now. 4137 here and 437 and then 420 our top and bottom liquidity. We have a CVD that's flipped red. And if you track in the CVD following, it's starting to trim just a touch, but over our negative. So it was down. It trimmed back up to about negative, or it's still negative, but almost neutral. So showing that there's not a lot of momentum to move this market for here either. $41.36 here. Now, if we go back to May, if you look back in this area last spring, what's interesting to note is that we had similar action back in 2022. We had consolidation with a momentary sell-off and buy back up, kind of like this. This one was a little bit more aggressive, just the nature of the liquidity. But This was all of April sell off, and this was May into the first week of June, and then we had a big drop in price in June. I'm not saying that we're going to drop in June. I do think we will break this range late May, early June. I think the time's coming where we will transition to range expansion again, and we will enter that phase in late May, early June. Second or third week of May, first, second week of June, somewhere in there is where I do think we'll finally break out of this range somewhere. I don't know. I don't know which way it'll go. I think you can make a case for bulls or bears here. There's cases for depending how the Fed will move, if the Fed pivots, if it hikes. Depends how the things go in Russia. It all depends on how China rolls. There's a lot going on here. There's a lot on the hot plate. So all we can do is really watch for liquidity and the volume. What I want to see is volume spikes here or here, something like this, to indicate a pivot in the market. The market will tell you when it's ready to pivot, but it will only do so with volume. It's going to be very difficult to pivot this market with this crap right here. This is just nonsense. I need some sort of spike in volume to indicate that the market is ready to pivot away from this. Because it's just not showing that yet. All right, so it looks like we're starting to make a little move here down. What, about 5-6 points down? We have the session range POC 4125 with that iceberg setting just under it. I'm going to zoom in a little bit here. NASDAQ has 420. Oh, man. All right, let me dig in here. What do we have? I have been tracking oil as well recently. Oil, and the reason why I've really been focused on oil because I think that the summer is going to kick off a move in oil. Oil has been consolidating longer than we have. It's been here in the 73 zone, 77 zone for 7 months now. And it's starting to make some pretty egregious moves. And the reason why I think that is if you go to oil or an oil related product like CO and you go here, strictly from a technical analysis standpoint, we're starting to see the range expansion. We're starting to see the range expansion, which in my opinion is indicative of a market move, or precedes a market move. The range expansion here, eventually we're going to break out and we're going to go down or up. But we're going to break out of a market expansion move. Now you tie in the geopolitical aspect of oil. If you can really pinpoint when a move is going to be made, whether it be through OPEC or Saudi or China, Russia, you could stand to make a good amount of money, especially at these lows. I mean, heck, we almost went down in the 50s a couple of days ago, and now we're starting to talk about the recovery levels from prior to Corona. And prior to Corona was back here. It was about $62 here. Now it's we've toyed with it a couple of times, used it as support. There. This is now the fourth major test of that Corona pivot level. So if you could track oil, which I'm building more and more visibility into oil, and of course using Bookmap here as well, it's a great opportunity to grab some liquidity. And here you see that 7180 is a great zone up top from 7105. That's 71.8 right here. I have trouble on when to enter a position because of the lack of confidence. What would you recommend that will help? All right. What do you currently use to enter? Like, what's your current system to determine entry? I mean, it could be a long-winded answer. It could be a lot of different ways to answer that question. The most obvious point would be to fine tune a particular system and to stick with a particular system. It really, like, I'm not going to harp too much on any one. I'm obviously a VPA trader. I do everything based on volume and price analysis, and I use tools that complements that strategy, such as Bookmap. Bookmap complements that strategy beautifully well because it's based on liquidity, which is a derivative of volume. So that's my first answer, is to really figure that part out. And then really hone that, grind that axe, and continue to develop consistency and develop your mindset. Supply and demand combined with retracements. Okay. Um, do you use volume at all? The volume part for me is what drives confidence. Because if I see a particular zone or level or area being respected or bounced off of or rejected, my first glance is to look at the volume. If I see big volume at that area, that tells me there's big participation, because I always want to do my best to be on the same side as dealers. That's my job as a retail trader, is to be on the same side as the dealers as much as possible. That's very difficult to do because they have algorithms and they have very smart people putting in the numbers in their computers. It's very difficult to do. So that's my job. And if I could see when they are putting orders on the book or taking orders off, that is going to drive my confidence, because I could sit here and have my theory and opinions and bias all day long, but it doesn't matter if the market is not representative of that bias. If I see a bunch of buying volumes hammering the tape, then that tells me, all right, I need to get on the long side of this market. I'm going to get smoked. So that's what I would recommend, is to derive some sort of system based in, or incorporate volume into your strategy, refine it, and then it's all about it. It's all about a practice in refining your edge is your mindset and applying that strategy consistently. Can you explain when to enter and exit a PCS? If I enter an PCS at 2900, 2000, would that be relatively safe for 30 to 90 expiration? Yeah, I don't know how much credit you would get for that. I mean, that's way on down there. But the only way that thing's getting touched is if, nuclear war happens. That's way on down there. So, yeah, so how you would enter a PCS is that you would determine when there's a little bit of downside in the market, or if you think the market has bottomed out at some, depending on what expiration, some time frame, across some time frame, you would place a short position on, and then you would long out contracts that are further away from the money than your short leg, because you need more credit than you're receiving, or you need credit, not a debit. So in order to get that credit, you need to short close to the money options and long further away from the money options to get that net credit. Now, 2,900 would be awesome, sure, but I just don't think you're going to get very much credit for that. You'll probably get a couple of cents for that. What the most recent trade I was looking at doing that's similar to what you're describing was a 4,500 diagonal. So what I was going to do is go out to June 30th and sell a 4,500 call on SPX, and then long any kind of call against that premium if we decided to get any upside. Because what that says that to me is that I am speculating on the market not going over 4,500 by June 30th, and I am solidifying that speculation by selling a 4,500 June 30th call. Sweet. Yes, I pay attention to it, but I can't see how to get the most of it. Yeah, so volume spikes. We could take a look at a couple of different examples here. Sorry, I was managing a trade. 5. So the way I go about now, I'm going to speak strictly on day trading here, not long-term trading. The way I go about managing volume or tracking volume is I am signaled off of the 5 and that I confirm on the 15. So for any kind of move here, what I would look for is a 5-minute volume spike. And once I see it, I'll flip to the 15-minute and confirm on the 15. So here's a great example for today. This was this morning. We have this big drawdown. Everyone's like, "Oh, the world is crashing. Everything's selling off here, blah blah blah." Well, and then we get this high volume spike on the 5-minute candle on this small bottom wick right here. Now this isn't as confident as they come because it's a small candle, but it is still a hammer, and we still have a high volume spike. So there's your first indication to go long, or at least to start looking to go long. Right there. All right. Can't see your full screen? Oh, yeah. Let me see what I can do here. Un momento. All right, well, hold on. I don't know if we can do that. Anyway. All right, so I'll have to figure it out when I'm off stream there. I can't get it to adjust. But yeah, so if you go back and look at your charts, check the 5-minute candle at 9:45, 10:45 Eastern time. You'll see there's a high volume spike right at the bottom of that 5-minute. Now, the 15-minute, you do see a high volume spike as well. It's just not quite as high as I'd want it to be on the 15-minute. So that's why I wouldn't call that a high confidence or pivot, but it would be enough for me to start looking at longs. All right, what are we doing here? ES just came back down just a little bit, 41.36. NASDAQ just put on a little bit of a red, coming up right here. That's oil. ES is 13.420 on down. So you see them starting to trim this upper liquidity. They've removed that. They removed all the book here. They've got this 13.420. And ES still has this 103 level down here, trying to track this thing down. That's a decent red candle. That's the biggest red candle we've had about an hour and 45 minutes on NASDAQ as well. All right. So into the bell, which we still have, quite a while, 2 hours or so. Track the volume on the 15-minute chart for the final power hour and how it closes, and that'll be a good indication of what's going to happen mañana. All right, 13.428. 41.30 is starting to be put on a little bit. So we have a little bit here at 41.30. 103. There's an order at 41.07 for a long time. Yeah, that's been on there for a while. So this morning, if you're tracking that 41.07, I need to come over to ES here. That came on this morning when we dropped down at, 9:15? Right here? At 9:18? So it's been on this morning. Now, I wouldn't be surprised to see that fill, especially them being put on like that. A little bit of red candles. Trying to drop all this down here. 15-minute. All right, so that is a signal to go short. We just had a high volume spike on the 15-minute top wick. That's a signal to go short down here. 13,414 just came right through this there. NASDAQ has got a lot of pressure coming on. Nice little move lower for 13,411. ES looks like it's finally going to come down and wipe that 41.20. And the iceberg, look at that. Big old iceberg just came on in addition. So this is, looks like it's going to sustain lower for at least a little bit. They've wiped top liquidity here. See this? They wiped it. They put on 1,200 orders, and they've had this 103 that's been on there all morning. Very interesting. High volume spike here. This is the high volume, relatively high. I'm not saying high volume normal, but this is relatively high volume for the market on the 15-minute right here. On down. Decent little move down. They've, like I said, in addition to the high volume, they've removed top liquidity. They sold off down here. They put on a very large iceberg, and now they're still going for this 103 right here. Still pummeling lower here, 13,400 right there. On NASDAQ, the morning low is 41.22 on ES. 41.2150. So if we get down there, be careful. That will be a decent time to start looking for take profits. So this zone right here, watch out for this zone right here on ES. Let me see this right here. Oil's taking off top liquidity there too, coming on down. They've got 70.20 here. NASDAQ is still falling. POC, once that clears 13,350. And that is the top liquidity down south here. 41.20 lower. A nice little move down here. Watching the power hour, how would you evaluate for a lotto? So, again, track the 15-minute chart. In doing so, you want to figure out where is the momentum. Who wins the power hour in terms of volume and price action? If it's ambiguous, then you don't really have a clear signal. And you may not want to take a trade. But if you've got a strong seller's action with price action and volume, that is an indication to start looking for downside. Now, that doesn't necessarily mean we'll open red if there's significant sell pressure and volume. That means we're going to look for weakness into the following close. So that is a stipulation you have to monitor. It doesn't necessarily mean we're going to sell off into the opening bell. It means that we can anticipate some weakness throughout the day, because you're not going to have dealers trying to scramble to exit their positions if we're going to have continue upside tomorrow. Remember, I want to do my best to be on the same side as the dealers as many times as possible. Yeah, definitely. All right, so now we're coming on down. Now look what they're doing. Look at this little guy right here. In addition to the 4107 that's been on since 9:15 this morning, we're also stacking on this down here at 4100. This is what we got to keep an eye on right here. Look at this high volume spike on the way down. You see these high volume spikes on the way down? Oh yeah, still definitely Lexus. All right. So they stacked on 4120. They still have 4107, and now they're put on 4100. Right here. Right here. $41.29 hanging out. But SPY is going to green again. Yeah, so if you look at that, the higher volume spike right here, let's go to the 15. So you see the uptick in volume start to build into the top wicks. That's your indication where sellers are starting to enter the market. Right on down. And now we have another high volume spike right here at the bottom. I don't know how accurate it is, but it's my indicator says there's a massive bullish OB here. Which indicator? Interesting. We've got tech bouncing back up, 13.412. It's an algo. Nice. So we came all the way down to the day's lows, and you see, once that's short all the way down, now we have another high volume spike with another bottom weight. So all they're doing is playing range here. They're playing range ball. Range, range, range. And that's just been the same old, same old. Short the highs, sell the buy the lows. SPY is an inside current day, so we can just chop around. Yeah. So that goes with 80% of the time the market consolidates, 20% of the time the market trends. And we tend to get into the trend mindset quite often, which is the wrong way to go about it. You want to maintain a range mindset most of the time, which is short the highs, buy the lows. Today would have worked out beautifully. Yesterday would have worked out beautifully, just a very large range. So you see the uptick in volume starts to kick in with the top wicks on the 15. If you go to the 5, it's a little bit more obvious. We sold all the way off, and then now we have bottom wicks with another spike in volume, which indicates bottoming out. TLT is 105. $41.31 right there. Nice little bounce off near the low of the day. We got within, what, 2 points of it. Delete that. Delete that. All right, 41.30. Now on my particular charts here, this 41.30-ish level is significant pivot area. So watch out for that area, give or take. We've got large volume spike again with another bottom wick on the 15. Shows you that there's a ton of demand in this area. because the second we hit it, we keep on getting bottom wicks in this area with a spike in volume. What's the longest time frames you'll set your iron condor for? Right now in this market, a week, because I can't predict what's going to happen week to week. In a normal bull market, I'll play a little differently. In something a little more predictable, I'll take a longer time frame, like a quarterly trade. But in this current market, I'm only doing weeklies. Now I'm tiptoeing back into the iron condors. I've been doing it the past 6 weeks, but I took a sabbatical from iron condors for about a year because the market was just much too volatile. But once I started to see the signs of the volume coming off in March, I started putting them on again. But yeah, right now it's about a week. You're very welcome, Quintanilla. Appreciate that. And of course, let me know if you have any more questions. We're about to come to the end of the video, so if you have any questions, let me know. I'll be happy to discuss anything. The top of the hour. But the book map right there showed some great liquidity posting lower. 41.20, they cleared out this upper stuff too. So that was the big thing. They cleared out all this stuff right here, gone, and they put on all this stuff. And they added this guy down here, 4,100. So it's good stuff. Sold at demand. I don't think I'm going to go back in again. I'm going to take 50% step away from the table. Yeah, that's great. Highly encourage you to do that. There's a certain time frame. Again, I know there's some people in here that are not in the community. I think I've showed this before on stream, but I came up with this little graphic to really encourage people not to trade after about 1 o'clock Eastern. These are the confidence times. And once you get into this later half of the day where volume is light, there's a lot of whipsaws, traps left and right because you can't confirm price action with volume because the volume just isn't there. It's just garbage. And then even Linda Raschke goes on to talk about it in one of her 12 rules, says that the best reversals, the best price action happens in the first hour of the day, in the morning. It doesn't happen in the afternoon because the volume's gone. What you see is that the market comes online, the dealers put on their positions in response to what's happened, then they go on sabbatical for the afternoon, and then they come back in power hour to mark their position for tomorrow. And that's why you get that big influx of positioning into the power hour. So that's why, again, like for the 4th time today I've said this, I want to be on the side with the dealers as many times as possible, and that means staying away from this crap for the most part. Not to mention, I don't know about you all, I do not want to sit in front of the computer all day. That's not freedom. Didn't you used to not trade the first 30 minutes? Yeah, still now. I really don't trade the first 30 minutes anymore. And every now and then I'll throw in a trade in the first half hour, but normally my bread and butter is 10 o'clock to 11 o'clock is my bread and butter. That's when I want to get most of my trades in. Sometimes I'll put in the first half hour, most of the time not. Yeah, EST, yep. $10 to 11 is the famous ICT silver bullet. I don't trade ICT. I've heard a lot about it. I'd be willing to. I've been wanting to take a look at it just because I'm seeing so much about it. I'm always looking to look at other systems, and look at that big old volume spike right there with the bottom wick. All right, y'all, that is the top of the hour. I have to shut this baby off. Let someone else come on. So let me know if you have any questions. Feel free to come over, hang out, ask some questions, shoot me a DM in the Discord or on email. Links are down in the description of the video. Until next week, next Thursday, I'll be here bright and early, 1 o'clock Eastern Time. Let me know if you have any questions. Thanks for hanging out. I'm out. See ya.